Hello, everyone, and welcome to another edition of our market opens. We're about 10 minutes away from when the markets open over in the US as we're starting this, but there's quite a few things to go through before we actually get there. So let's talk about a few different things that were happening overnight. First, let's talk about Adobe. Now, many of you probably aren't invested in Adobe. I actually hold quite a reasonably big position in them because I'm extremely excited by the stock. But if you have been following them in any way, you might know that they just announced their results yesterday, and their share price has gone up quite significantly. Let's go and have a look over here. So, no, we're in the wrong tab over here. We're going to talk about it in just a second. So Adobe's up here on the pre-market, looking very, very healthy. Where are we? 3% up. And if you look at their Q2, so they report on non-calendar quarters, they posted some really, really good results. So they posted a total revenue of 3.8 billion. That smashed what people were predicting. So the people were predicting that because we're entering kind of like the runoff from people working remotely and all of that kind of stuff, that this number was going to begin dropping, because in Q1 that number was 3.9, but there was an expectation that would drop considerably, but they posted almost exactly the same revenue as they had the quarter before. And then if we look over here in terms of cost, revenue and ops expenses, we have an operating income of $1.4 billion for the last quarter, which is actually very close to the one that did. Q1 for these guys is usually the sort of like license to print money. But this is the interesting they went and beat the quarter before on almost every single thing that they on every single product line by about 21, 24, 25%. And that is incredible year-on-year growth for a company that is, relatively mature, relatively large, relatively stable. I think this is probably just the beginning of the growth for me personally, because I think that the way that they are moving ahead within their industry of anyone even remotely coming close, and the way that that industry is growing, all the different products these guys are offering in terms of content creation, video, etc. I'm just so extremely excited by it. I'm very happy by the fact that there's suddenly some movement in them, because there hasn't been any movement in Adobe for some time. I mean, if we go and look at Adobe's charts over here, let's have a look. Let's have a look. Where is them? I don't have them in here. Let me add them. If we look at them for for a little while, they've kind of been trading sideways for a long period over here. We're looking, look back to August last year, we were trading over here at the same sort of levels that we were trading just earlier in June. Let's look at a week. Yeah, so we're going like all the way back almost a year of just trading sideways over here after sort of like a gradual growth that was doing really, really well if you were invested in them for the 2-year run over here. But anyway, hello everyone. I apologize to anyone joining yesterday. The live chat for some reason wasn't working, but it is today. So there we go. What are people asking? Pensions. We'll come to that in a minute. I don't actually know. There's a couple of websites where you can go and look stuff up, but it's not ideal. It's not great or particularly easy in the UK. But Google it, because I did look at it the other day for somebody, and there are resources where they'll do it. Anyway. Next on my list is AMC, and AMC, for anyone who's been living under a rock, is going through this really long short squeeze play that we've been in, well, sort of for, what is it, like coming up to 3 weeks now, really, this latest one, after playing around with the GME process a little while ago. But we're kind of seeing a really interesting thing right now where in the last day, things have begun moving, and so there's a lot of interest today on AMC specifically, because today, reportedly, according to inferences from the way that you can read interest reports and according to a bunch of other stuff, today is the day when a bunch of hedge funds are going to have to make calls as to whether begin like cashing some of their short positions in, or at cost extending them through other instruments, etc. So today's going to be a big day for AMC, and it was interesting because through yesterday, if you kind of look at this through yesterday, apologies to anyone kind of watching this from different time zones. The times might be all messed up because I live in the UK. Some of these anyway. So yesterday we kind of opened up at $56, but then fell by almost 10%, or like it's quite heavy down here, where certain news were emanating through the day, kind of calming things. But then suddenly towards the end of the day, when people realized that today, or tomorrow, yesterday is today, I don't know what I'm saying, is the 18th of June, it began ramping up, and it went all the way from the sort of $52 territory all the way to the $62 territory, and that's where it ended the day. But in pre-market, it hasn't really moved. I mean, I don't have it on here. In pre-market, it hasn't really moved. So it'd be interesting to see what happens when the market's actually properly open. So let's see what happens back there. All right, next on my list of things that happened, I made a few notes in the 2 minutes before this live started. I've done my homework. I hope you appreciate. Tesla had a good day yesterday. They went up 2%, and that's because there's been several different movements in the market. So like Ford's been dropping, where I think a lot of people move between them, kind of which of them is going to be moving forwards better, which is a better investment for long term. There's some good news emanating. They're kind of suggesting that Berlin might actually be coming through on some kind of rough schedules, and then there's been a few other stuff. But today in pre-market, they're 1% down again. So it's just they've been trading at this level since they dropped, since they had a big drop. They've been trading at this level thereabouts for quite some time. Let's have a look at the share price over here. Where are they? Tesla. We've been having this like super long period where it depends who you are, because there's a large group of people who continue saying that trading at a very high PE ratio is incredibly wrong. You know, like, how dare somebody have a 600x multiplier or something? You know, when the company's only just broken even for the very first time. I kind of hear them, I kind of get them, but I disagree. I have a video where I go through my evaluation. Maybe I should do because not many people watch that video, because I think it went a little bit too deep. Maybe I need to do some slightly simpler versions of those types of videos. I'm actually next week going to be doing some of those. But my valuation is significantly higher than that, and people are kind of like yo-yoing between the old school investors saying, "Oh, it's horribly overvalued," to the majority, I think, of the people who are bullish are quite strongly bullish on them and have quite a big have quite a big upside baked in. For me, I have on auto only an $1,800 target price. That's my personal price, and the reason I mention this because it's in that video and it's public. But you need to go and do your own homework. Don't listen to chumps like me on the internet. I know nothing, and I'm most likely extremely wrong on that. So make sure you have your own, and you trade against your own anyway. Somebody's asking, somebody sold AMC, Kyle Charles sold, and Jamel Raleigh asking, are there any other short squeezes I'm watching? To be fair, I watch quite a few of them from the sidelines, but I don't really play, because like for me, I'm interested in the long term. Let's just jump to me. So it's for me, I'm interested in the long term value of these companies that I'm invested in. I'm interested in the performance I'm going to be seeing over years. I'm not interested in timing it to the minute and making sure that I have my hand on the pulse and making sure that if the short squeeze ends or some news emanates, that I'm within minutes able to liquidate my position. I just don't, that's not the kind of game that I play. It's not the kind of game that I want to play. I don't live my life that way either. I don't, I live in the UK. I don't sit there at 8:30 p.m. Just as the markets are about to close, trying to figure out, is something about to go south? That's not what I do. So I don't have anything against people who do, just I'm not a trader, but I do enjoy kind of all the stuff. As somebody who has worked in trading before, as somebody who has actually done that kind of job with candlesticks, with literally doing the stuff. I personally don't actually enjoy doing it, so I choose not to do it when it's just for me. But the majority of my life I've done long-term investing, so buying and selling companies' portfolios, that kind of work. So I enjoy that process far more, because it just works on maths. Because the problem is trading largely does not work on maths. It works on hype. It works on people working on news, people working on short-term movements and what's gonna spike some interest, what's gonna happen. But it's not really based on, and people like to pretend that it's based on maths because they look at the charts and like we do some lines and we're like, oh my god, if the candlesticks look like this, then it's definitely an inflection point. The truth is, from somebody who's studied maths and somebody who has done it, like it just doesn't. That there isn't I know some people make some money, but the truth is, long-term investing is difficult enough. So, like, the vast majority of people lose against the market, but the market wins overall. So the vast majority of people still win in the long term with investing. Their money grows, but the vast majority of people who try to trade will lose their money. And we're talking the vast majority of people. So I don't talk about it not because of my personal preferences, but just because it's one of those where I think a lot of people misunderstand what the potential is really with it. Some small number of people who have access to very sophisticated software tools, systems, information can do really well with it. But that number is extremely small. And the vast majority of people who do make money trading make less money than if they were flipping burgers in their local burger shop. That's a fact. Look it up. Anyway, another interesting news that's been happening recently is, so if you haven't been following, the Fed has had a meeting where they went up, I can't remember what the number was, it was like from 6 people to, I think it was 13 people who voted for bringing forward the first estimate of when they're going to be doing a rate increase, although we're still talking. So the statement that they released said that vote confirmed that a bunch of these guys, I think, what's the total number in that committee? 18? I can't remember. So now they're saying that the majority of them are believing that the rates will increase before 2023. So we're still talking 1.5 years worth of time in which it might happen, and how much will it happen? Who knows? And when will it happen? Who knows? It is going to hit some of the stocks like Tesla, some of the stocks like CCIV, some of the stocks that are very forward-looking in their revenue forecast, because inevitably people are going to be discounting by more. But I think people are overestimating by how much more the discount rates will rise, because people kind of think, well, today the rates are so close to zero. So if they go up to 2% or to 5%, and suddenly the valuations of all these companies are going to go to zero. Like, we're going to be buying stocks that are making revenue stably today, like Walmart. Everything else is going to die. And the truth is, it just isn't the case. And the reason that it isn't the case is because today, so when we have near zero rates, you don't discount by like 1%, right? You don't discount by even 2%, which is maybe what you might be able to get somewhere else in bonds, for example, so on some terms. You discount, like typically when you're doing valuation of a company, you're discounting by 10 to 12% roughly on average. That's what you're expecting. And you're baking in some potential future increases in inflation and a bunch of other stuff like that. But you're actually baking in some of the risks involved indirectly through using higher rates. But what that really means, so because most people will be using that in their forward cash flow models, but to discount today's rates, what that really means is if you're discounting by 10, 12% today and the rates go up, you're probably only going to be having maybe a 10% increase, or maybe a 12% increase relative on your discount rate. So you might go to, from 10 to 12 or something like that. On a more mature company, maybe from 12 to 14. And in the grand scheme of things, like it is extremely rare to have discount rates, other than for specific companies, specific situations. It's extremely rare to have discount rates that are in the 20s, like 25%. Some people mentioning. So I think people potentially maybe who are not necessarily investing based off models or based off valuing their placing values on their stocks are probably overestimating, I think, like the ridiculously huge impact that some people are saying these interest rates are going to have. Anyway, I'm going to just check what people are saying and have a drink before I lose my voice. Apologies. What is happening? Is everyone feeling good? Oh, thank you. Some kind words from Ostrex. Very, very kind. Thank you so much. He's a channel member, been around for 2+ months. By the way, if anyone else wants to support the channel, I'm very, very appreciative. But thank you so much to the channel members who do join us every now and then. Next up, I wanted to Ooh, we're 5 minutes past opening. Let's have. I'm sorry, we were just chatting. I need to pay more attention to just life. I need to pay more attention. So what's happening? Let's have a look at what the stock market is doing. Tesla is falling. We are down about a percentage point over here. And it's the candlesticks are big. There's a lot of movement happening at the moment. So that'll be interesting to see. Are we going to be doing a bounce after the pre-market was already down? The pre-market, remember, was already down about 1%. So are we going to be bouncing up, or is this just the sort of like volatility before we going back down to $600? I hope we don't go down to $600 because I do like having kidneys and I like having a car and I like having a child. So hopefully we're not going to have to do some selling in order to buy Tesla shares. All right. What's happening with some of my other favorite stocks? So let's look at Nvidia and AMD, because this stuff with the movement with Adobe have been interesting. Micron is actually down, but because there's been some memory news. But Nvidia is up. What are we up? Not very much, about a percentage point. But again, a lot of volatility on market open in some of these stocks. So this is going to be interesting, because a lot of people are saying that some of these more popular stocks, some of these stocks that are being held by a large number of people, are potentially going to be sold off. How come we don't have AMD? What is happening? Let's go. AMD is down, but very marginally. So we're not. Oh, is it? It's a percentage point. There's a lot of movement. It's a very sharp start in terms of volumes and in terms of movement. So that'll be interesting to see as to which way that goes, because usually that's a sign that it's going to begin moving one way or another. But the question is which way, and that's going to be quite interesting. Let's turn off these patterns. I hate patterns. What's happening with AMC? Seeing as that's what we were talking about earlier, but this is interesting. Go away, patterns. This is interesting. So we're having these big bars going up, and the question is today the day when we're going to be spiking because of the stuff that we were just discussing a minute ago? And so far we're moving up by a couple percentage points. So that's interesting. Oh. Thanks for pointing it out, guys. I'm out of practice. I've been on holiday. I've been doing other stuff, so I'm out of practice. I need a switcher. I don't have a switcher, so I need to improve that. So AMC is doing good. For anyone who missed it, so here is the Tesla bars. They're going up and down a lot. They're moving around a lot. Here is the semiconductors. Ooh, look at that. SML is dropping. This is quite noticeable. This is what, like 2-3 percentage points. Okay. AMD, and where's Nvidia? We just had Nvidia just a second ago. Here we go. So there's a lot of movement in the semiconductor space. You can see up and down over here. So again, this is another 2% drop over here for Micron. Some hedge funds and other people like sponsored some news stories overnight about Micron, saying that their domination of the sort of like small memory chips is coming to an end. I'm not necessarily convinced. There's definitely some weird behind the scenes going on with all the semiconductor stocks at the moment, because we talked about this yesterday, but it's one of those interesting things when realistically people keep talking about even last night, so much news that talks about the chip shortage, and yet when you go and look at the quarterly reports and the various sales numbers and stuff like that, every single one of these companies is absolutely killing it on sales. So what we're really seeing is a demand spike, like a spike that we've never seen in electronics before, probably because of what's happening in the world of tech. And to me, like it's like the first signal. It's like the first thing that you begin seeing, which is then going to propagate to the supplies and the growth of companies that are essentially building these things into their hardware, into their products, into their long-term growth numbers that typically don't, come through like a quarter later or 2 quarters later. It's one of those where when you're looking at these types of industries, it's really useful to know where the signals are coming from. And to me, when I see the signals of what the sales numbers for AMD look like, AMD yesterday had an absolutely ridiculous day. It went from $80 up to like 84 or something, like 5%. or thereabouts. They were higher, trading $85. When you're seeing the sales numbers and the growth that these guys are going, so Tesla is putting AMD chips into their latest cars, right? There's so many interesting things that these guys are doing. It's a bit like during the financial crisis. This is just an interesting thing that for some people that like to kind of study these things. The first thing that began showing signs that we're about to go really hard down were credit cards. So if you look at all the different financial products and the metrics and the behaviors, about a quarter before things really began going down during the financial crash, credit card numbers began spiking. So if you kind of think about like typical household budget, about all of these kind of behaviors, the first thing that you stop paying when things begin going like tough is the credit card. So you'll pay your mortgage, you're going to pay your phone bill, you're going to pay your car loan, you don't want your car repossessed, right? You don't want your phone to stop working, you're going to continue paying for all of these things. The first thing that you go and miss a payment on, if you're going to miss a payment on something, is a credit card. Well, you get a late payment fee charged, you get some interest, boo-hoo, right? That's kind of, but it's interesting because you saw this sudden spike, and I think a lot of people in the industry were then waiting for the rest of the wave to turn up. And it's interesting because to me, the stuff that we're seeing today with the semiconductors and the companies that are using them, like AMD, etc., is sort of, to me, like the precursor for where I think companies that are the next tier up are going to be seeing for the rest of this year going into next year. So I'm quite excited and bullish about them for that reason. So that's quite an interesting one. Tesla is decided it's going to move up. So obviously we had the overnight slight sale coming, but Tesla decided to move up, and it's moving up reasonably fast. We're back to pretty much where we were. Well, actually, we're slightly above. We closed at 616 yesterday, so we're a bit above that. So that's good. Somebody saying might be worth getting. I have a plan for what I want to get. I have some tech that I really want. I don't have the money for it at the moment. That's the absolute truth. It's expensive. Tech is expensive, so I'm waiting for that. If I happen to begin earning some money from this YouTube gig, some more money, then we'll buy some more tech. At the moment, it's all going back into the biz. Somebody's saying, fascinated by your name, Sasha. What's your family history? I'm Russian. I was born in Russia. I grew up in Russia. Well, Soviet Union, for anyone who cares. But I have a video called Sashayanshin Exposed or something like that, where I actually talk through my background a little bit. So if anyone's interested, I made that video before people begin exposing me and saying how I'm an awful human being because they disagree with a point of view I made or something. So I thought I'd make that video first. So there we go. Let's have a look at some of the other stocks that I think that I'm particularly interested in today at the moment. So the gig economy stuff that I was talking about recently, we're seeing a bit of a bounce, a little bit of a quite a bounce. Wait, we're on the wrong track. This is good though. Look at this. This is good. We're like at 5-6% bounce on Fiverr. That's what we want to see. So this is a sector that I'm very, very excited by for the next 5 years or so. And what's happening with Etsy? So like, and Etsy doing this dance at the beginning of the day with the big bars, and it'll be interesting to see if they follow. It's looking like maybe they're going to follow Fiverr upwards. I think these companies are so underreported. Nobody talks about them. I haven't seen a single other finance channel. Everyone talks about the same stuff, right? Everyone has the same. They're like everyone talks about these 5 companies, so I'm going to talk about the same one. I'm really excited by these guys. I think Fiverr is ridiculously undervalued. We'll talk about that next week. I'm going to make some videos next week talking about why I think that is the case with some numbers and some maths. So there we go. And what's happening with CCIV? Because CCIV was reverting back, and they're sort of yo-yoing up and down in this $23 territory. I'm very, very excited by the stock, but the problem with CCIV is I just don't see any short-term real movements. I can see them potentially heading to the high 20s when the ticket change happens in July, hopefully, maybe. Who knows? Nobody knows. Maybe it'll be pushed out to sometime later in Q3. But I don't see any other material change to the stock. For anyone else who's very excited by CCIV, I am one of the biggest bulls on CCIV just because of I have a video or two where I talk about that in a bit more detail. But can we talk about Fastly stock? Fastly was in the news for the wrong reasons in the last week, when they caused an outage for an hour for almost all the big websites out there. They haven't been doing very well. The problem with Fastly for me is, unlike some of the other companies in similar sectors, let's have a look. Do I even have them in here? Yes. The problem with Fastly, let's have a look at a chart that goes a bit further out. For anyone who doesn't know, Fastly is like a provider of the tech behind companies that host stuff on the web and provide like lots of additional services, DNS, etc. But the issue with Fastly is their service and tech is decent, but it is not like unique and miles ahead of the competition. It is not something that like other people cannot replicate with, not a huge amount of difficulty. It's one of those where you look at some tech fields and you kind of look at somebody's doing really well, but you kind of say, well, somebody who has money can go and build a service that is very, very similar, that actually works pretty well. Somebody like Google, somebody like who do offer very similar things, can go and do it. And they are sort of market leading at the moment. A lot of people use them. But my problem is, do I think they're still going to be here 10 years in the future being the market leader providing this service? I'm not sure. Yeah, well, somebody saying Fastly was Rahul was saying Fastly was a user error. So it is. The problem is, if you have a user error where one of your users using your software can do something that breaks your entire service, that's not good. That is not a good way to run your business, right? Anyway, let's quit Fastly. I don't really follow them. Let's look at some of the big stocks and whether there's any movement in the market today on there. Amazon, fractionally down. We're not seeing too much movement there. If you look at the scale, it's just like it's flat. What's happening with Google? Google's down a little bit. Again, very, very marginally, 0.15% thereabouts. What about social? Social's down. It's just a generally down day today, isn't it? So some people are flat, some people. But look at this. Oh no, 5 minutes. Let's look at 1 minute. The S&P 500 is trading flat. So if you're invested in the market, unlike chumps like me who decide to try to pick things, you are doing quite well. So there you go. We just keep proving this every single day. I think like in this series of live videos, we're just going to keep proving that trying to pick your stocks is a dumb thing to do, despite all of us trying to do it. But it's amusing anyway. By the way, if I'm using Trading 212 here. I'm using Trading 212 for anyone who is in the UK or some other countries that are not the US watching this. Some interesting news from Trading 212 yesterday. They published their new terms and conditions. They managed to publish 3 sets of new terms and conditions in the time that they haven't actually had any new customers, which is quite entertaining. And I was going to do a video on it, and I actually did like some diving because previously people quite enjoyed those videos, but there wasn't very much to say. They're kind of like clarifying a bunch of stuff, and they're actually improving some bits. So pretty much all the changes in terms and conditions for anyone else who has this here that I'm showing you, the date on is Trading 212, and they haven't accepted customers since the end of January, but this latest set of T&C changes is basically all about share lending, and they're making it so that you don't have any choice. They will lend your shares, and there's 2 important things that I think are the sum of a lot of writing they've done. The first really important thing that Trading 212 is doing is they are how shall I put it in a politically correct way? They are screwing customers over by forcing people down. So previously you kind of had a way to opt out potentially by contacting them and speaking to them. Now you don't have any way. So if you say that you want to not have your shares lent out, they will close your account down, put all your positions in sell only mode, and then you have to sell them, losing the fees taking the money out. But while you're selling them, before you've sold them, they can continue lending you shares out, which is interesting. They have added some security which previously didn't have. So before this set of terms and conditions change, which actually takes place in July, but they've already updated it on the website, which is a bit weird. If you're a customer today, you go and look at the terms and conditions, they've already, the ones that you see are the ones that are only coming in a month's time. But anyway, aside from I think screwing that up, they've made it so in the past, when your shares were lent out, the company that was borrowing those shares, those hedge funds who like to short them, they would give them security in the form of cash, and the cash was like held by Trading 212. And the problem you had there is you had no relationship whatsoever with the company that was doing the borrowing. So what that meant is if Trading 212 overnight, say, went down, you would actually have, in that situation, the way that they were operating, have lost your money. Maybe I should do a video on this. Because your recourse was only Trading 212. If Trading 212 would go down and the cash they're holding is not ring fenced, which it wasn't according to their previous terms and conditions, then you would be like, you would not have the assets that should normally be segregated, but because they've been lent out, you don't benefit from the segregation of them sitting in a separate account somewhere. What they're now doing is instead, and this kind of points to maybe why they've not been accepting new accounts. Maybe they were working to set this up. Maybe the FCA had a problem with them. Maybe the PRA, probably not. But what they're now doing is, instead of that setup, the companies that are borrowing will now have to go and provide collateral in the form of US bonds, and that's quite common practice, and it's actually reasonably good because it's quite secure. They're relatively liquid, but the added benefit here is that those bonds are going to be held in a separate segregated account. And what that really means is if say Trading 212 overnight went down, you would and your shares were lent out, you would still have recourse to those bonds, and the bonds cover 102%, and they are settled at close of day for the day. So the beauty of this is, if say there was a crash, and there was a flash crash during the day, right? So the previous day's total of your shares, for example, was higher than it is today. Now it would mean that if that day Trading 212 went down because of all the volatility and whatever, then the amount of money sitting in a segregated account would actually be far greater because it was 102% of the value yesterday. So you'd be able to get like money relatively easily from that. And it's quite unusual to have a flash explosion of the market, right? Everything just go boom, upwards. So you don't really, so because that would be a situation when it would work the other way, but that doesn't really happen. And usually when that happens, it is quite unlikely that Trading 212 is going to go down. But the other benefit here is that if, say, Trading 212 do not go down, but the counterparty that hold the securities on your behalf that are collateral goes down, you still will have your money, because that becomes Trading 212's problem. Well, actually not theirs, but the people borrowing. And unless that hedge fund also collapses, in which case you and Trading 212 are both screwed. So basically you have three parties, right? You have the borrower of your shares, the hedge fund, you have Trading 212, and then you have the other party that is holding on to the collateral, right? And what you really have to have in this situation is you have to have at least two of them go down in order for it to be bad at the same time. So either Trading 212 goes down and the collateral holder goes down, or the borrower and the collateral holder go down. If in this situation, those are the two scenarios in which, if that happens, then you're screwed. But it's very unusual for one party to go down at this, in any one time, and it's hugely unusual for two people to go down. Anyway, we went on a big side topic here. Let's talk about Bitcoin just while we're at it, because it's kind of interesting. It's kind of interesting. We saw Bitcoin go and try to where are we? Let's go Bitstamp. We saw Bitcoin go and do some interesting movements. Why are we? Okay, there we go. Just a few days ago, we were sort of popping the $40,000 mark, and now we're back to the same $37,000 mark that we sort of seem to have been sitting on for about a month now. About a month since we had that Elon tweets and everything that wanted to go down. So we're seeing this kind of stagnation over here, and it's an interesting question, because if you're new to Bitcoin or new to crypto investing, which a lot of people are, you kind of think, oh, you know, like, is this like sort of a lull, etc. But the problem is, this whole like Bitcoin story, like if you were around over here, I remember selling a bunch of my Bitcoin over here to make my business survive. Anyway, that's a long story that's separate to this. But you kind of have this long period of a lull where not much was happening. Then we had this big spike, which is I think when most people, well, not most, when a lot of people heard about Bitcoin for the first time properly. There was a bit of news coverage over here. So we had this spike, and then we had this sort of down, and we're, you know, up and down, and then we had to wait until spring 2019 for things to begin picking up again. So we're talking about over a year here again, for things to be going. And even then it was sort of jumping up and down until we had the rally through last year, for the second half of last year. And so the problem with this kind of thing, because there are all these issues that are not going away, right? So there are pressures down. There's the environmental pressures down, the regulatory pressures down. There's the utility and usability. So without the layers above Bitcoin, transactional utility is not really there with the very low number of transactions they can process per second. So all of these pressures are still there, and so the big question is really, and it'll be interesting to see what people think. Are we just entering another one of these lulls for the next year and a half, or is this? Are we now past the point when like we're following the same pattern every 3 years, and are we going to be doing something a bit different? That's an interesting debate. It's an interesting debate. I'm just checking if anyone's got any questions or anything interesting happening. But let's quickly dive into our stake portfolio. So I've got this stake portfolio where I am playing at trying to beat the market, actually doing quite good. So I only added more than half the money a few days back, and so this is the average return. It would be interesting. I'll convert all these to like an annualized version when I do the next update on this. For anyone who hasn't seen them, I do these videos where I try to beat the market. Where I've recently started is going kind of well. Micron letting the pack down. But if you're interested and you live in the UK, Australia, New Zealand, Brazil, I think it is, you can go and use my link in the description below if you're interested, and you'll get a free share when you sign up. And the lowest free share that they do is GoPro, which is about $12 or $12.50 or something. And the highest is Nike, which is $140 something or whatever it is at the moment. So it's pretty cool. I'm actually enjoying this platform a lot more because it doesn't have like the level of data and information. So like with Trading 212, you have the company information. So if you click on any company, you have all of the, like, let's say you have all the information here. You can go and look at any of the numbers for any of the years. It's pretty good. None of the other platforms in the UK offer you even remotely close to this kind of level of information. The quality is good. It's almost always like fully populated. You get the last 3 years. You get quarterly if you want for the last few quarters. So it's really good. And I know that you wouldn't use this necessarily to do investment, but as a quick check or just like while you're in the app, this is good. The data and the graphs are good. The stuff that we're looking at here, this is all far better than any of the other platforms. But the thing I really like about Stake and why I've been talking about them recently is it kind of feels more like a long-term investor platform. Like things are a bit more chill here. You don't have the like things flashing and like minute by minute and like things going red and green or things that jumping up and down. And sure, you get graphs. You get graphs. Look, here's a daily graph. It's smoothed out. You can even do it in candlesticks if you want. It's not quite as detailed. You can't do 1 minute candlesticks or anything, but you get some stuff if you really want it. But it just feels a bit more chilled, and I'm kind of appreciating this. I like the fact here, this is a tiny thing, but I like that the default setting you have over here for buying stocks is limit rather than market. The default is market, so that you just click buy, done. It's actually kind of good. I think that people are educating people that limit buys are actually a good thing. So anyway, so how we're doing? We're 0.2% up, which is good. Because what's happening with the... I can't type. So the market, the S&P 500 is down at the moment, 0.8%. So that's good. What's happening with VTI? VTI is down 0.8%. We're beating the market today. Whoop! It's obviously a complete fluke, because in the long run I'm definitely going to lose out, but it's fun. It's fun to pretend that this is going to do well for the long term. So far we're what, a month and a half in or something like that, a month and a bit in, a month and a half or so, and it's going pretty well. Let's quickly check back. So Tesla has decided to come right back down to where they closed yesterday, which is an interesting move. It's kind of just yo-yoing. We're not seeing any conclusive movements over here. And what's happening with AMC? AMC's climbed to the $63, $64 territory and decided to sit there for now. We're seeing a bit of a movement up and down. Have I looked into Tether, a potential problem it could cause the crypto market? Yeah. I'm not sure if because the problem is there's so many people talking about crypto on YouTube, and there's so much noise in there, and there's so much dirt. And I dared to make like a couple of videos about one of the biggest scams that is going on at the moment, and I got just so much hate about it and so much negativity. It's like thousands upon thousands of comments and reaction videos and all kinds. It's just, I don't need it. I'm not sure if I really want to. Somebody asking, does stake offer ISA? No, stake do not offer ISA. They only allow you to invest in the US stock market. I have a video where I introduce them if anyone's actually interested. So your money's actually held in dollars over here. So ISAs have to be in pounds. So the reason they do it in dollars so that you don't have to pay the foreign exchange fees when you do the trades. So you pay foreign exchange fee of 0.5% when you load the money in, and then when you take the money out, which kind of sounds expensive because it's, 0.5% sounds expensive because it's more than trading into a free trade, but you only do it once. Every time you buy and sell, there's no fees whatsoever. And that's what I like about it, because for this challenge, I'm going to be buying and selling, like over time quite a bit. And I have no fees while I'm doing that. So the fees are only on putting money in, putting money out. So that's why I'm quite interested in it. Abdul was asking about the Fed increasing the interest rates. I talked about that earlier in the video. Rollback, it was kind of early on in the beginning, I think we were talking about. I think it will have an impact for sure, but the question is when, and the question is by how much. And I think a lot of people are overestimating what the impact of the Fed increasing rates is going to do in the long term to companies that are actually kicking ass. By the way, talking of companies that are kicking ass, what's happening with Palantir today? Are we going to have another chance to buy? Because $25, it's going up again. At $25, it's good value, but I think like the return will take longer. Like I remember, like when it was $19 and $18 just a month ago. Now that was for me a pretty good price, but I think the numbers they're going to be posting for Q2 are going to probably, for me, look really, really good. So we're in middle of June at the moment, and when we're entering middle of July, like second week of July, that's when all the updates from all the companies begin coming out for the second quarters of the year, and that's when it's going to get really exciting, because I think some of these companies are going to show a lot of movement. And I think Palantir, for me personally, this is just my personal opinion, I know nothing, and you need to go and do your own research, but I think companies like this may show some really good numbers, and I think some of the semiconductor companies may show some really interesting numbers. But then when we're looking at some others, like if Churchill actually do the merge and they do the first set of like what the state of play looks like, or if there's going to be any, I don't think those will look quite as rosy. So I think it's interesting, because if you're investing for the long term, you kind of don't really care about the fluctuations, but you can kind of predict probably to some degree which are going to be moving sooner and which ones I think are going to take a bit longer to actually come through. In the EV, there seems to be a lot of movement upwards in general. So Canoe is another one that, is doing kind of well over here. We're above $10. It's been sort of a bit of a yo-yo, you can see over here for the last week, and everyone's trying to figure out are they actually going to have like good products coming out soon, because we shall see, we shall find out. What's happening with Zoom? Another one that this stock got so popular because people began using the product and just went and collapsed right back down. Look at that. I don't hold a position anymore. I did some time ago, but I do not. I didn't hold them for a huge length of time. What else we got? Square. these guys are just a misnomer for me. The stock price to me doesn't seem to reflect what the company is doing. It seems to be doing the opposite every single time I try to predict what I think is going to be happening. Like, we're trading at the same level as we were in December last year. I know that there's been, like, you know, regulatory pressure and like trying to acquire stuff, etc. But anyway, that's probably a topic for another video at some point. Ford is falling back down. I saw this earlier in the pre-market, and I was kind of pretty sure it's going to continue doing it because everyone got very, very excited by their EV claims and stuff like that. But then as that excitement began wearing off, people began realizing that actually they are maybe over-egging their own potential slightly. It's just slowly trundling down. It's almost like a predict that downward movement. Right, let's have a look at some of the more, wait, what's happening with GameStop? Whoa, like GameStop is not having a good morning so far. Back to AMC. AMC is sitting on 63. Be interesting to see what AMC does towards the end of the day, because towards the end of the day is when it can begin really moving ahead of the weekend. I'm not actually sure in which direction it's going to be moving, but I have a feeling that it might be moving just because of all the news emanating about today being an important date for the hedge funds who are playing the other side of the game. Anyway, let's look at some of the other stocks that people get particularly excited by. Lemonade is up a little bit. Like, what are we up, like close to a percentage point or thereabouts? That's good. Virgin Galactic, I personally am not a fan at all, but I know a lot of people are. A lot of people love the stock, but I'm not sure if there's like mathematical love there or just like playing hype or what it is. And I know that the moment Branson flies, we're all gonna be looking at the price going up for no reason whatsoever. But that'll be an interesting thing whenever that does happen. Tilray, yeah, there's not anything particularly exciting. Has anyone been looking at Coinbase recently? Because people kept saying like there's a dip and you need to buy, and I kind of feel like I think I made a video when they were doing their public offering, well, like going public with the company, and saying why I'm not excited about investing in Coinbase and why I think that some of these stocks get horribly overvalued at the point of launch, and using Coinbase specific example and saying like I think the price is way over what it should be. And well, I hate to tell you, I hate to say I told you so, but oh my god, like there was so many people, like I think pretty much every person that I saw on YouTube in the like 2-3 days running up to when that happened was saying you need to buy because it's going to go to the moon, and crypto is exploding, blah blah, all that kind of stuff. But the truth is they didn't even have to wait for Bitcoin to have their collapse to begin going down. This was happening while things were still rosy. So yeah, I think people need to pay more attention to actually doing valuations. Not trading because somebody on YouTube said so. Not trading because you heard it on the news or, you know, like people on CNBC are saying good things about it. You need to invest in companies because you do your homework and you actually build your valuation for a company, and you think that the current valuation is significantly below where you think that valuation should be. That's what everyone needs to be doing. Yeah, I always get amused because I did a very basic valuation. I just couldn't see how people were valuing and the levels they were valuing. I just couldn't see like how far you had to twist the numbers in order for that valuation to actually come out at where it was coming out. So it's interesting. There's a lot of movement you can see on a minute by minute basis over here in the price, but it's staying flat. It's not moving anywhere with Tesla. So yeah, I think we've covered pretty much everything. There's not really any movement over here. Bitcoin down slightly, fraction of 1% at the moment, so not much movement there. But I think I'll leave you guys there. I'm gonna go and make an actual content video that will help some people hopefully understand some things better. Thank you so much for watching. Thank you so much for joining. I really appreciate it. Thank you so much. I'm sorry I didn't get some of the questions that people were asking. I was trying to just jump and talk about a few different things, and I'll see you guys later.